going on, guys? Welcome back to another case study. Today I will be covering euro dollar, the usual um, trade I took on Friday. So let's get right into it. We are on the hourly here. You can see built a lot of liquidity through the early parts of January, inducing buyers here for quite a long time. Finally taking out high up here. Okay, trapping sellers, inducing buyers. So look at all that liquidity we left to the downside, and price kind of trickles down here, and then just slams right through it. Okay, trapping all of those, all that buyer liquidity, and then finally tapping into this imbalance we got to the left hand side. So you can see any buying that was going on at this level over here finally gets taken out of the market. All that liquidity gets liquidated, and then we kind of just been trading below all these higher time frame lows for a couple days, building some more liquidity. And yeah, so coming into Friday, on the 15th, so we can kind of see things a little more clear here. So we were edging down a little bit, finally took out another low. All right, went bullish, taking out these highs to the left, which tells me buyers are induced. This should end up being a trap. Okay, so as you can see, we did respect the lows temporarily. And why does that occur? Well, it's simple because this is a liquidity block right now. So there was no liquidity. So that's why market takes out the highs, induces buyers, traps those sellers, comes back down to the low, okay, respects the low to engineer liquidity in the market. So now we have that reason to push below these lows. Okay. So with that understanding, look what we left at the highs. We left a inducement high. And right above that, what do we got? A liquidity block. So that's what I got my eyes on. I do believe inducement high will get ran, and then possibly we could see that follow through to the downside. We'll see what early market open does coming tonight, actually. Yeah, tonight. Yeah, Sunday already. Just didn't even recognize that or realize that. Okay, cool. So with that understanding, I want to see inducement high ran, right? Look how market's been respecting it for quite a while through, I believe, end of Thursday going into Friday. We've been trading at this area, inducing sellers, okay, building liquidity. So I want to see this high taken, okay, and that was the bias I had coming into Friday. London. So what ended up occurring here? Well, we tapped into this area. Tapped to this area. This was Thursday night. So yeah, this is Asia session. We get a sell off to the downside, taking out this liquidity that left here, inducing sellers into the market. So these areas should all be traps. We're going to have liquidity above this high, and also, of course, above this inducement high. All right, so that high to the left. London, we ended up taking out Asia high, okay, trapping sellers, which fuels a nice sell-off back down to the downside. I believe there was a little entry. Yeah, so market trickles down after taking out Asia high. Coming into New York open, we get a big spike up, grabbing all that liquidity, taking out inducement high, and mitigating liquidity block, just like this. So how can we take this entry? Well, you simply wait for that inducement high to get taken out. You want to have your stop above inducement high, and now you have all this liquidity you can target. One being here. Unfortunately, I believe if you were to target this low, yeah, it's only a 1 to 2.3, so you'd have to hold it a little further. You got this low down here, which makes it about a 1 to 3.7, so like a 1 to 3.5, give or take. And then we actually ended up coming down all the way to the bottom, trapping out buyers, which allowed us to have a clean buy opportunity. Okay, so this is when I was interested. Look and see how from here to here, we took out the high to the left-hand side, right? Which tells me, since we've grabbed that liquidity, buyers are now inducing the market. These should all be traps. We don't want to be buying in these areas until this low down here is taken out. Once that low is taken out, we understand now that all the buyers that were left in the market are now trapped, And now we can see a move back up to the high. Okay, but not only that high, don't forget we have this high in mind. Okay, the inducement high from the left-hand side. And again, liquidity block sitting right above it. So it's a good confluence that we could run that inducement high and then maybe see a move back down. Okay, so how did I get involved in this? I simply waited for this low to get taken, which happened right at stock open. Not well, 10 minutes after stock open. Perfect. Let's go to the 1 minute. Okay, so we grab that liquidity, we trap buyers, and again, since we've now taken out this structural low down here, this tells retail that they're going to be wanting to sell from these kind of areas over here. We understand that's going to be a trap, right? We don't want to be selling with them. We want to be buying into it essentially. But yes, perfect. So we run the low and then we get a nice reaction to the upside. Look how we wick above this high, but we're still trading within this leg here essentially. Okay, so this is still going to be any reactions we get, any false bearish reactions are just going to be a trap. Okay, they're going to be false and it should be just a pullback. Look what happens here. We get a reaction from 10 a.m. all the way back down to the lows, and I believe my entry was taken. Yeah, it was on M5 here. You have a nice liquidity block left at the extreme. Why was liquidity block respected? Obvious reasons. There was no liquidity below the low, so we simply mitigate this area and then we move away. Okay, my entry was actually taken a little deeper into the liquidity block because since the stop was a little bit big, I wanted to wait till it came a little bit deeper. And partial point, the structural high up here. Perfect. About a 1 to 4 to the high, and then my other target was going to be this high to the left-hand side because after this high gets taken, remember what we talked about in the higher time frames, we left this engineered liquidity at the lows, right? And look, ever since we respected the low, look how we're just building liquidity to the upside, right? Look at these lows we left over here, and now we've left these lows from Friday, and look at all this liquidity we're leaving on Friday as well. So everything's hinting that after we take this high out, we could see that move back down to the downside. But again, we just got to wait and see what the market does early week, right? So market open is in a couple hours, so we'll see Sunday night, Monday, what's gonna happen. But yeah, I hope you guys enjoyed this study. Nothing too complex about this entry, to be honest. The story and the bias was kind of just straightforward. But yeah, hope you guys enjoyed, and I will see you guys on the next one.